What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So yesterday I made a speed run on a cheap dividend growth stock to buy. Pretty hot right now. There were some connection issues or something with YouTube editing videos. It just didn't finish in time, so I just said, hey, I'll do a speed run and I'll do a remake in this video. I actually made one change. So I'm going to reveal to you these top 3 monthly dividend ETFs. These have, some of them are making comebacks, some of them are very popular. These are traditional and Roth IRA material stocks. One of them I'm actually looking at adding on my M1 Finance dividend portfolio when M1 Finance allows it. I'm going to probably implement it in my dividend growth investing strategy. A lot of people own these 3 dividend stocks for a dividend growth investing strategy. So I'll do a stock analysis and dividend stock analysis as well. So make sure you hit that notification bell so you don't miss future videos. Smash that like button. And let's check out these ETFs right now. We have an ETF that's making a comeback right now. The symbol is PEY. It's the Invesco High Yield Equity Dividend Achievers ETF. It's sitting at $21.17. Volume is 422.92K. The market cap is 771.68 million. Year range was 1927 to 2207. Day range was 2107 to 2128, and its previous close was 2119. What makes these guys so special? So I'll go kind of in depth about these guys, because when you look at ETFs, it's just like a real estate investment trust. You want to know what's inside of it. You need to know the expense ratio. You need to know how it's done against the S&P and see, is it really worth what you want? And again, this is not financial advice, for entertainment purposes only, disclaimer in the description. But there's people that love ETFs and they only go with ETFs or index funds, or mutual funds, and that's it. They don't like dividend stocks. They don't like stocks individually. They like these things. So you got to look into the inside too. So let's check this out. So the Invesco High Yield Equity Dividend Achievers ETF is based on the Nasdaq US Dividend Achievers 50 index. Fund will normally invest at least 90% of its total assets in dividend-paying common stocks that comprise the index. The index is comprised of 50 stocks selected principally on the basis of dividend yield and constant growth in dividends. The fund of the index are reconstituted annually in March and rebalanced quarterly in March, June, September, and December. So it's a 4-star rating by Morningstar. So anytime you look at Morningstar, I always say, okay, it's a 3-star more. Really need to look into it. 4 or 5-star, that's always promising. So the SEC 30-day yield is 3.97%. The distribution yield is 4.10%. 12-month distribution rate is 3.89%. And the 30-day SEC unsubsidized yield is 3.97%. Okay, but we need to look a little bit more into these guys first. So here's our sector allocation. Okay, large cap 3.85%, large cap blended 4.42%, mid cap 24.37%. Top holdings, Altria Group, AT&T, right there I'm like, maybe they might get kicked out. Exxon 3.31%, Valero Energy 3.29%, Universal Corp 3.24%, South Jersey 3.14%, Chevron 2.88%, OneOak 2.79%, Northwest Bank Shares 2.64%, Unum Group 2.50%. So far against the S&P, it isn't too attractive, okay? You know, some people like it, some people don't. We need to look a little bit more into these guys because, you know, again, looking inside the pie, what about expense ratio? Right here, so management fee is 0.40%, total expense ratio is 0.53%, number of holdings 52. So manageable or marginable, excuse me, yes. Exchange, Nasdaq, options, no. Short selling, yes. And marginable, again, yes. So right here, the management fee is 0.40%, and the expense ratio is 0.53%. So symbol is PEY. Okay, so the other thing we need to know, okay, not doing too hot against the S&P, like I said, okay, but is it worth it with its dividend history? Let's check that out. Okay, so we are seeing some promise right here. So 2014, 3 cents, cracked 4, 3 cents, 4 cents, hit a little bit at 3 cents, 4 cents, 5 cents, 6 cents, cracking 5, then it hit 6. Right at 6, 2019, 2020. Then it cracked 7 cents. And it's sitting at 21.16 with a dividend yield of 4.1%, annual dividend 0.86%. This is a monthly dividend stock. So you see the expense ratio. Now the trends are a little bit slower for me. This is one thing. Some people really like this one. They like to be conservative. There are trends going up. It kind of reminds me of Gladstone land stock, where it's just taking forever for the dividend to jump up. It's a little bit stagnant. 2019, 5 cents, 2020, 6 cents, 2022, 7 cents. Now, looking at this, the dividend yield of 4.1%. Now again, I'm not giving financial advice. It's for entertainment purposes, only disclaimer in the description. I'm going to compare it against QYLD real quick. QYLD has a dividend yield of 12.69%. Right now it's 19.52. The dividends are way higher. So I like high yield dividend stocks, monthly dividend stocks. QYLD right now is blowing them out of the water. Again, QYLD though, the only difference between QYLD and PEY is the net asset value is probably going to increase over time with PEY versus QYLD. QYLD will be at probably 17 cents, like I said in my previous video, 17 cents, 20 some cents, and don't expect it to increase its dividend to 30, 40 cents consistently. PEY, it's going to take a long time for it to do that. So that's why I like QYLD a little bit better in this situation. But PEY is a really good monthly dividend ETF. Don't get me wrong. That's a very popular one. I think it's well managed. I think the portfolio is pretty strong. But I want the dividends. I want, like with my M1 Finance dividend portfolio, I want my monthly dividend stocks, buy my quarterly dividend stocks, and I like my covered call ETFs to buy my quarterly dividend stocks. So that's one difference with my philosophy versus some of the recommendations that you guys gave me to do reviews on stocks. But there's nothing wrong with PEY. Let's jump to the next dividend stock. So the next one is WisdomTree U.S. High Dividend Fund. DHS is a symbol. It's sitting at 85.02. It has a year range of 74.01 to 86.72. Its day range is 84.37 to 85.06. So it is increasing in price per share over time. Slowly, it is increasing its price, which is good. It's not keeping up with the S&P. So I don't really think this is a good ETF to put in a Roth or a traditional IRA. Maybe if you want to be a little bit more conservative and not as aggressive, sure. And again, I'm not giving financial advice. I'm just saying looking at the trends and studying the trends are important to making the decision for a traditional Roth IRA, because I like traditional Roth IRA stocks or ETFs to keep in line with the S&P or beat the S&P. But the big thing is, let's see what's inside of these guys. So here's their top stocks. Okay, they have 314 equity holdings. Exxon right here, 6.95. Chevron, 5.86. Pfizer, 4.92, AbbVie, Coca-Cola, Philip Morris, Altria, Verizon, Merck, Cisco, jump to a few more, Bristol Myers Squibb, Devon Energy, Gilead Sciences, Morgan Stanley, Lockheed. So I like what's inside of them. 3M, Kinder Morgan, U.S. Bank Corp, Trust Financial Corp, Newmont Corp. I really do like what's inside of them. Some of them. That's just some of their holdings. Now it goes by percentage, and then it starts going lower. So here's a few more things. What is the expense ratio of these guys? So we have to see what's inside of them, and why are they worth a buy? Is the expense ratio like absolutely worth it, or is it just like trash? So let's check that out. So its expense ratio right here is 0.38%. So again, QYLD, RYLD, and XYLD are in the 0.66%, let's just say 0.60 to 0.70%. So the MSCI earnings, okay, that's ratings or an A, that's good. But this is just really interesting with these guys, with DHS. I don't think it's as good as Vanguard VYM. and I'll explain to you why. Vanguard VYM is 108.52. Now, this is a quarterly dividend stock. The expense ratio is much more attractive at 0.06%. So the thing is, they seek to track the performance of the FTSE High Yield Dividend Index, which measures the investment return of common stocks of companies characterized by high dividend yields. So right here, okay, this is the growth of these guys, which is pretty attractive. So this is actually a pretty good traditional or Roth IRA material ETF as well. So the thing is, number of stocks are 410. Their top ones are Johnson & Johnson, JP Morgan, Procter & Gamble, Home Depot, Exxon, Bank of America, Chevron, Pfizer, AbbVie, Coca-Cola. Already, those are very attractive. And again, they're very well managed by VYM. So I'll go to DHS's dividend history, and then I'll go to VYM's dividend history. So it's sitting at 84.75. Now, scrolling down, getting like 11 cents, 24 cents. You can get, more with Agree Realty Corporation or O, basically for the price per share and everything. 17 cents, 24 cents. Kind of a scatter bomb. 35 cents, 11, 12, 27, 14, 33, 19 cents. 2020 was 34 cents. 7 cents when a pandemic hit. 4 cents, 17, 27, 18, 29. They hit 36, and then all of a sudden they hit 4 cents. So 4 cents, okay, that's not very attractive for sitting at 84.75. I like trends going up. I like the dividend trends. So I'll show you VYM. Now look at VYM's trends. 2013, 41 cents, then it cracked 56, then it cracked 59, then 57, then 60, then it cracked 70. Again, this is a quarterly dividend stock. Then it hit 80, and it hit 90 cents. So it's almost cracking the $1 mark. And again, you're getting consistency. So since 2017, let's just say 2017, 56 cents. It never went back to 56 cents. It is just going up. And it almost hit $1. And it's sitting at 109 right now. $109.19, almost 20 cents. So its price per share has gone up, makes it attractive traditional and Roth IRA stock. It has done well against the S&P, by the way, and it's a quarterly dividend, but it's actually doing much better than DHS, and the expense ratio is much better. I'm going to jump to the final monthly dividend ETF. That would be the new monthly dividend covered call ETF. Well, monthly covered call, I don't even know if you want to say dividends or passive income. Let's just say covered call passive income with QYLG. And that's a covered call growth ETF that Global X just made. This is recent. And it's sitting at 27.07. Its previous close was 26.50. Its day range was 26.59 to 27.15. Its year range was 26.35, 34.20. So let's check out what these guys are about. QYLG seeks to generate income by writing covered calls in the underlying index. By writing covered calls in 50% of the portfolio, the strategy allows investors to capture half the upside potential of the underlying index. QYLGs expects to make distributions on a monthly basis. So, right here, total expense ratio 0.60%. So this one will potentially, don't quote me on this, increase its price per share. So since inception, the net asset value is 27.34. The 1 year, the fund net asset value 18.54. So here's their top holdings. Apple, Microsoft, Amazon, Alphabet, Tesla, Alphabet Class A, Alphabet Class C, NVIDIA, Meta Platforms, Broadcom, Costco, Wholesale. Now again, I have not done covered calls or options trading, so I kind of like these guys. I cannot wait for M1 Finance to put these guys in their portfolio. I may throw them in my Roth IRA, my future Roth IRA, or I may put them in my M1 Finance dividend portfolio. The number of holdings are 103. So the most important thing, okay, the distribution is 6.30%, and the distribution, like I said, is monthly. So the most important thing, okay, is its dividend trends. Let's check that out. Okay, so 2020, October, 13, 14, cracking 15. So it hasn't made it to back down to 13 cents, which is good. So 14 cents, 15, 13, 15, 14. Now that's a special one, right here, 160. But 14 cents, it hasn't went down to 13, which makes it attractive. Now, this is one that needs to be studied a little bit more. You need to do your due diligence on all of these, but I want to show you guys, looking inside the portfolio, it's just like a real estate investment trust. Look to see what's inside of it, and does it attract you as a monthly dividend investor? Some of these can be yield traps, okay? You have to be careful with that. Is the expense ratio worth it? Have they done well against the S&P? How can you implement these three in your dividend investing strategy? So let me know what you think of this video. I like to compare PEY to QYLD and then DHS to VYM because I do see somewhat of an equivalency. PEY and QYLD is a covered call ETF, but this is what I just want to show you when it comes to dividend income or earning income versus growth investing and what you want to do. But QYLD really intrigues me, and I'm really going to look into that one. And once I start seeing some dividend hikes, income hikes. I don't even know if you want to say dividends because it's covered call options. Once I start seeing hikes from that, I'm probably going to be in. And again, this is not financial advice for entertainment purposes. Only disclaimer in the description. Do you guys like these three? Do you like DHS? Do you like PEY? And do you like QYLG? Let me know. I'm going to post a video tomorrow for you guys as well. Take care and have a good one.